Hey everybody. Let's see. Okay. There was a pop-up on moderating the stream. Welcome everybody. Y'all have little faith, huh? So, welcome. Welcome. Oh, let's see what everybody's doing this morning. We got Lieutenant Colonel Goose in the house, Skaggs, David A, Hugh, Will, Dawn, Scott, Dan, Rob, Andrew, Terry, Diane, General Rush, good to see you, sir. Sledge, Rob, Kevin, Serge, and we've got a couple just regular subscribers like Jimmy and Carlos, Garneau, good to see you. Hey, I haven't seen the gecko. I, that picture I had was from a few days ago, last week, and it was like a week or two before that I saw him the first time. So I don't know where he hangs out, or it hangs out. We'll see if be a, I don't know. I mean, there's lots of bugs around here, at least for now. See what it does in the winter months. All right. Cool. I just closed the monologue. That was genius. Absolute genius. Hold on a second. The magic of the stream. So I fixed my AC unit last night. Finally got the condenser motor in yesterday sometime and swapped it out. You know, it was pouring here yesterday, like pretty much all day, just absolute downpour most of the day, and constant, just lots of rain. And I got home and it wasn't raining. I was like, holy, I got like a few minutes between the showers, and Kimberly was like, oh, I've almost got dinner ready. It's like, all right, do you want heat in the house or should I come in here and eat? And she was like, well, I'm not exactly ready. I was like, all right, I'll go work on this. And so I go do it all, swap this thing out, plug and play kind of with a few nuts and bolts and things, and go turn it back on. Doesn't start right away. I was like, okay, give it a minute. It starts up, still making racket. I was like, no. It had, I guess, because the bearing was out, and it was wobbling. It had broken the fan part loose from the hub part that attaches to the shaft of the motor. So it had actually broken the fan part of the condenser fan. I was like, son of a biscuit, man. Take it back apart, go out to the garage, break out the welder, hook it up to the solar battery system, and then it starts pouring rain, like absolutely downpouring rain. I'm sitting there trying to weld in the rain. What an evening. But eventually I got it all back together and it did work. And didn't electrocute myself more than twice. Anyway. This all goes on top of, yeah, I mean, I got to eat dinner. It was the 20-minute project turned into like an hour, maybe hour and a half. I don't know. Anyway, so Microsoft took a bath. Meta pretty much got punched in the face. Google taken off. FOMC was a roller coaster of news. Yes, we got the rate cut. We're gonna end the quantitative tightening in December 1st, but we're not so sure that we're going to do any more rate cuts for a while. And Chipotle announces that if you're under 60, you pretty much quit buying burritos. So they got punched in the face too. It's been a wild ride. So welcome back to the show, everybody. And it finally happened. The day we've all been waiting for. The day the market holds its breath. And the report cards of the cool kids. Some of the Magnificent Seven came out. And, It's the 7 companies that basically have more money than half the small countries in the world. Last night, we had Alphabet, the golden child. Hey, they did good. Microsoft, the overachiever who suddenly developed a very expensive hobby. And Meta, the drama queen who always finds a way to make a scene. So grab your coffee, your monster, and let's dive into the story of last night's earnings deluge. It's a tale of soaring highs, dramatic falls, and spending that makes your head spin on all sorts of things. Of course, we'll be looking back at those little glimmers of opportunity. First up, Alphabet. You might know them as Google, and let me tell you, their report card, it was so good, it was almost boring. They didn't just beat expectations, they blew them out of the water. We're talking about over $100 billion in extra revenue in a quarter. I mean, that's a first for them. They haven't made that much in a quarter. Their cloud business is growing at a staggering 34%. They have a backlog of $155 billion of pending sales. I mean, it's kind of like having a line of customers out the door around the block, all with tons of cash in their hands. They're spending a ton on AI. Yeah. But unlike some of their friends, it seems to be actually paying off. Yeah. We'll see on Amazon here. But, Amazon announcing they're putting on data center. The biggest AI data center in the world came online, and they announced that just in front of earnings today. So, maybe there's a little competition going. And, well, Google stock, or Alphabet, just hit a new all-time high after the report last night. So the question is, did you miss the boat? Or is this just the beginning of a next leg for a company that's already in the $1 trillion club? Can it hit the $4 trillion club? With the kind of cloud backlog and AI integration, plus they're working on stuff like quantum chips. I mean, hard to bet against them, but as always, buying the top is a risky game. Now, Microsoft, they also had a pretty great quarter. They beat on revenue, they beat on earnings, and they beat on their cloud business. Azure, it grew by a very respectable 39%. So why the punch in the face? Because, my friends, this market is... in this current market we got, that wasn't good enough. All right? To be a cool kid on Wall Street, you got to be outperforming. You got to have growth in the 40s, not 39%. That's a B plus, maybe a B minus in their book. So the real story here is spending. Microsoft is on a spending spree, spending on AI like a teenager who has a credit card and they don't understand what a limit is. They dropped nearly $35 billion on CapEx expenditures, as capital expenditures, in the one quarter. That's up from the $24 billion they spent last quarter. They're dumping money into data centers and buying AI chips like, they're behind or they got to catch up or whatever. I don't know. Gets investors a little spooked, I guess. And we'll take a look at the charts, but worried about the cost in this AI arms race possibly getting out of control. I mean, we see this circular investment. I've been talking about it for weeks. So what's the investment play on that one? Well, here's where it gets interesting. This is a classic case of maybe a market overreaction, or maybe we have a legitimate concern and Microsoft's big AI bet might not pay off as quick as anybody hopes it will. If you believe Satya Nadella that their long-term vision is good, this dip could be a beautiful buying opportunity, but I've been saying it's due for a retrace down to that daily roadmap line, so we'll see. But if you're worried about the bottom line, you might play wait and see and wait till we actually hit the daily roadmap line. And finally, we have Meta. Oh, Meta, always the drama queen. Their report was actually pretty good. Revenue was up, user numbers up, and even their crazy Reality Labs division beat expectations. So why the punch in the face? Because of a little thing we like to call a surprise bill from Uncle Sam's past. Meta got hit with a one-time non-cash tax charge of $16 billion with a B. You heard that right, $16 billion. And apparently it's related to tax law from the Trump era. Maybe the old Trump era. So even though it's a one-time thing, it doesn't affect cash flow. It made their earnings per share look absolutely terrible, though. And, well, market loves a good panic, you know. So what's the opportunity here? Classic buy the dip, potentially. The underlying business could be strong, but they're down below support. Maybe you want to wait until they actually start turning higher. I mean, people are still scrolling through Instagram, still jumping on Facebook, and the company's still printing money. The market might be overreacting, but maybe we're going to punish them a little bit more. Could be an opportunity, but you got to have the stomach for drama. Because Meta, there's always some drama. So that's the tale of the three tech titans that have reported earnings so far. We've got Apple and Amazon up today after the close. We'll take a look at the charts here, see what we got cooking. It's a rough day so far today. Coming in with that, just the drag down on the market. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. Not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, well, they make there's people called financial advisors that do that for you, tell you what buttons to push. We did get the rate cut as expected, in line, lowering it on down. Forecast 4, got a 4. That's basically pushed it on down. And where's my button here? So in the next couple weeks, we'll be pushing this on down, and the target will be the 3.83 right there between 475 and 4. I mean 375 and 4. So it starts getting a little tight, though. Starts getting a little tight. Need to copy one of these blocks. Let's see. Copy that one. Pull it down here. Put the middle of it about the target there. There you go. We're going to be pushing this on down. And then December, what happens? Jerome Powell was very clear that, he was very almost adamant that you should not expect a rate cut in December as a foregone conclusion. The betting markets were basically at 91% that we were going to get another rate cut in December. 91%. But I think this closeness here has got them a little bit concerned. A little too close for comfort. For their target to where the market rate actually is. Unless this pushes on down, they don't really have the room to cut in here. So we'll see what happens. Now, there's a lot of cracks in the system, and it would not surprise me one little bit if something broke and they had to cut more aggressively, more quickly. So, be something to keep an eye on. In case you didn't know, the next meeting coming up in about 6 weeks. So we've got 1, 2, 3, 4, 5. Should be right here. Yep, right there. The 10th of December. That'll be the next one. That'll be the last one for this year. Then we'll roll into January. 1, 2, 3, 4, 5, 6. And we'll see what happens in January. Government still shut down. day 29, day 30, what is it, whatever it is, day 30. Been shut down for over 4 weeks. Poly market, our Kalshi here, actually had a dip yesterday in the prediction. We were down to like 41 days yesterday. But now we're spiking back up to 44. We're getting close to that 40-day mark. People going to lose the money right there if we go past 40 days. Let's see what's happening here. Yes or no? Current shutdown. This will be interesting. And another interesting thing in the betting markets, I don't know if y'all saw this yesterday. There's going to be new competition for Kalshi and Poly markets. A new competitor entering the ring. That competitor, their ticker, DJT. Yeah, this is not going anywhere right now. Just keeps grinding lower, holding support. They're going to start the truth markets or something like that. I don't know what the name was going to be. CMG taking a big whack right there. That's why I sold the 34 puts. If I get put those shares, brings my cost basis down to 43 right here, which is a much more reasonable place to be than up here at 49. Let's see what happens. Now, the sign was on the wall that we were probably going to see this when we took this spill right here, because I was kind of, when I started this, I expected that to be the bounce, but then we got down to a lower low, and well, that couldn't be it right there. So now we have a potential A, B, 1, 2, 3, little baby 4, and 5. Now, is that the right 1, 2, 3, 4, 5? I don't know. Now, the rules of the game for this particular move is that the 3 cannot be the smallest move. So this move right here, from here to here, if that's the 3, cannot be the smallest move. Now 1, it's a little bigger. Go from that high, we go to this low, we go to this right there. You can see that pretty close. Well, actually, slightly bigger. Looks like if I got that clicked on there right, that'd be kind of wild. Yeah, that's clicked on there, pretty close, pretty close. Yeah, it's slightly bigger, even though it doesn't look like it. So technically, that can be the 1, that can be the 2, that can be the 3, even though we didn't get to a classic 3 extension, which would be the 1618. Usually, typically, classic, the most ideal, you have a 1 and you have a 3. That 3 is a 1618 times bigger. But the only rule in Elliott wave is that 3 cannot be the smallest wave. Can't be the smallest. So the fact that you use the fib tool and you measure from here to here, project it off of here, which that would be the 1, that would be a 3 wave 2. An A, B, C, infra 2. Then we have the 3 down, which that gap was pretty aggressive. Then we get this little consolidation that was very sloppy. 4 potential. And then that is potentially the finishing move right there to that 1618 level. And this might be the end of the correction on Chipotle. Might be. Can I guarantee it? No, I can't guarantee anything. Compare 1 to 5. Typically 1 and 5 are very similar in size. And if we put that, undo, put this right here. Yeah, that was basically top of the 4. 1, 2, 3, 4, 5. Yeah. And that puts the potential support on Chipotle right there. So if we have more downside to go, want to see it hold here. Why did I go at 34? It's because my entry times 0.7. That's real sloppy. I'll show you here. Oh, cool. My calculator closed. Probably close that when I close the 49 was where I started out. 0.7 times that. 34, 30. So I'm 30% down, essentially, below the initial attempt. I made a guess that this 3 wave was complete. And it turns out that that was just an A, B, 1, 2. And I got caught. So how do I fix it? Work my way back out. So I started out at 49. Now I'm 30% down. I'm going to add. In this case, since I bought a size of 4, adding a third is difficult. So I'm going to add half. I'm going to add 50% more shares. Not money, but 50% more shares, which is roughly 33% more money. Add it. That's why I sold the 34s. If I get put those, it's possible that this shoots back up. I don't get put them, and then we rally on higher. So I had a plan going into this. Still got a plan. If you don't have a plan when you go into these, this is how you do it. That's how you make your plan. All right. Hopefully you're finding value in this. You let me know in the chat if you did find value in that and me working through that whole thing right there. What my plan is, how I got it wrong, but how I'm not letting myself, having been wrong, turn into a big loss. Instead, working my way back out. All right. I have 400 shares at 49. 400 shares. That's underwater. 30%. Some people are like, oh, if I'm down 30, if I'm down 20%, I'm out. Well, I went into this with the thought that I may have to add at 30% down. I planned on adding 33% more if I got to that point. Now, if we go down another 30%, another 30%, I'll probably add 33% more again. That will bring my cost basis way down. Now, if I add at 34, my cost basis goes from 49 down here to 43. I can much more easily sell upside calls at 43 with price down here than I can at 49 or above. Now, big picture, if this whole big thing is done, quit moving the friggin' fib lines. If this whole big thing is done, this was the high, this will be the low. This kicks off this potential. Now look where the fib line is now sitting. If my cost basis drops to 43, and this is just an A wave down of a bigger correction, B wave gets up to the 618, I could be out for profit before it takes a bigger move down. So this is part of my plan, is to get where I can get out. I'll evaluate, like if this is very bullish price action up in here, then I may hold on to it. But if it's just kind of blasé and we get back up in this area, I'll probably close it out, move on to something else. That's the bigger picture plan. All right. Deep dive into that one. Microsoft. It's being super soft. I've been pretty adamant about the fact I think we're going to correct deeper. And we'll see if that actually happens. That was a lower high. I've been expecting a revisit of the roadmap line. This 1, 2, 3. It's very ABC-ish. Didn't look very impulsive to me. It went high, but now a breakout above here at this point kind of says that we might be going higher. But the fact that we overlapped that right there with this price action right here indicates to me that we have more downside to go. So if you're long Microsoft and you can't survive a pullback to this area right here, I'd be very cautious about what you got going on. Maybe buy some puts. Could it go higher from here? Sure. They can do anything they want to. Anything can happen. Anything's possible. The price action is suggesting we may get this initial move down, this retrace, and then just like Chipotle, get something a little more aggressive to the downside. But right now, it's just kind of bouncing around. Meta. It's right there. That looks like an A. That looks like a B. This looks like a very aggressive A, three-wave A. It's like a very aggressive three-wave B. And then potential C here. So we got... Now, the warning on yesterday was that we had not closed above the 618. And I warned that yesterday morning. We had not gotten above the 618. And that may lead to a bigger correction. And that's exactly what we're seeing here. Here's the high. Here's the low. And we're at the proportion to be done. Like where's the subwaves? C waves sometimes are so aggressive they don't even have subwaves. We're down in the vicinity of a potential bottom if this is a three-wave complete. So if you're shorting the crap out of Meta, expecting a bigger fall, I'll be very careful on this because this is the zone where I typically expect completion. We just have no subwaves whatsoever. So that this first move down right here, copied and projected off of that move down right there. That's the symmetry. And we got a little extra gusto on the downside there. Now, could it go deeper? Sure. We can come all the way down to 600 at this point. And That one won't matter. This is the one that does. It's possible to come down and find support at 580. This zone right in here could set this up for a bigger bounce if we visit down in there a little deeper. I was kind of expecting that we might see a bigger correction, but at this point, we've got given here. That could be three-wave complete. This can go launching off. Upside targets right now, 812, 826. We'll have to see what develops. If we develop more softness, more weakness, we can see it down in here, 580. If we get below 580, we'll probably take a trip down in this 540 area. And then if that doesn't hold, we may actually go lower low and complete that big three-wave thing if we just went a little higher. And that would be a big A, B, C. So there's some potential downside cooking. And then Google. We're getting a little hypoxic here. This reminds me of the way Microsoft did on last earnings. We may need to do some retrace action here. Come back, fill in some gaps that we left open in here. So 304. I'm a trend pullback continuation trader. There's no pullback here. That's just rip. We're getting way over what's a healthy move for a rip. And that went kind of exponential up into that high this morning. Now, the big dogs reporting earnings today after the close. We've got Apple on the markets, the betting markets. It's about an 81%. That Apple's going to beat. But we've got Nancy Pelosi coming in 3 days ago, selling $250,000 worth of shares. And maybe we see a bigger downside in Apple. So they may beat and we still get downside reaction. So that'll be interesting to see. Is Pelosi right? Or is the betting markets right? Or are they both right? We actually get a downside move, but we beat on all the earnings. Historically, Apple beats every single time. Only once on a blue moon do they miss. They're really good. And historically, they've been really, really good at always beating earnings. That's just the way they do it. They sandbag the estimates, make sure the analysts are, conservative in their estimates, and then they blow it away. That's how they run it. And their share price does really good when they do that. Now, these guys have been the worst performer this year in the Mag 7s. And this pattern does concern me. Similar to what META had cooking. But we did get a close above the 618 here. From this high to this low. Although my low is not quite on the low. There we go. Missed it slightly. Come on. There we go. There's the high, there's the low. That price action did close above. We may see this dip back to the roadmap line, hold, and push out. That would be the classic expectation here. So I like what we've done here. It's setting up for a potential catch up. Now, companies don't usually come out and announce stuff before earnings. So the fact that Amazon's like, hey, we just put this giant data center online. It's the biggest AI data center ever. And we've got it fully booked out to Anthropic. And they want us to build another one the same size that they can fully book out. That right there, as long as Anthropic can keep money flowing, could be very bullish for Amazon. Potentially catch up. But we'll see. It's all in the numbers, right? Like, do they have good numbers and blow it out and report good stuff? Or is the retail business weighing it down? And the AI stuff just the shiny object that, hey, look over here. I don't know. We'll see. We'll see which one happens. ES. Jumping back to the broader market. Well, that doesn't look too good. That's 3 waves, though. Let's see. Was that high the high? Yeah, that was the highest high right now. So at this point, we've got the high, we've got this low, we've got this retrace, we've got a 1, 2, 3, 4, 5. We got potential to come down to 68.50. I warned for a couple days now that we might be due a bigger correction. This can develop into this. And then we come on up and get a higher high again. I didn't bail on this idea. I still think we're due for another trip down. The Trump G news today could be the thing that pushes it down into this area. Then we could see another recovery into early November, which is only next week. Be careful out there, everybody. NQ is kind of the same deal. The reason I expect that big correction is this price action right here started out very nasty. And this kind of created a big 1, 2, 3 or an ABC up. And we're potentially topping out. And if that is the top out, is all the same pattern, all the same stuff. It just, this is a corrective pattern higher, which is not typical, but that's what we've been seeing a lot of as we grind higher and higher. This has the proportions for an A, B, C complete right there. You can see the proportions there, right in the game. And this looks like a 1, 2, 3, 4, 5, right up into the top. This very sloppy A, very kind of sloppy B. And then we shot up. And we got down really close, but not into where I would expect it to, but being aggressive on the upside. Now, it's possible I'm off a little bit. This is the A, this is the B. That was a 1, 2, 3, 4, 5, and we get a little more push higher before we flip this down. Difficult to say for sure until it happens. So there is potential possibility that we hold in here somewhere in the vicinity where we are. Somewhere in here, push it higher one more time, and then pay the piper with a bigger retrace. Back down in here. That bigger retrace would look something like, just spitballing here, it would be a retrace back down to this area right here after hitting something right up in there. So if we can maintain the bullishness, it would look something like this, and this is going to be like almost straight down. What would be the cause? I don't know. Maybe Trump and Xi don't do a deal. We get that 100% escalation on China November 1st, which is Saturday. We come in on Monday, and it's a bloodbath. I don't know. Keep your eyes peeled. I don't know what the story is going to be. Chat's awful quiet. Let's do a poll. Start the poll. The China deal is going to be bullish or bearish. Place your bets. Place your bets. And if you're having fun today, make sure you give me a like on the video. Share it with a friend. Phone a friend, share it with a friend. As far as Russell goes, we're still missing that hit up here. Let's go check on RSP. Still missing the hit on the upside. We're grinding in here. Look at this choppy grind. So a couple of these are cautionary flags. Once we tag 194, it's a caution on flag on the play. And then 199, if we get there, that can open the door for a bigger correction to take place. This is RSP. It's an equal weighted S&P 500. Kind of takes the wind out of the big tech a little bit. So I kind of watch some of these as a dashboard. Coming in, checking on S5TW. Stocks about the 20-day. Well, we might need to visit the bottom. S5FI might need to visit the bottom. We might need a bigger correction here. S5TH could still use a visit to the top. So we may see a little bit of correction. Stocks about the 20-day and 50-day, but then going up for the big show here. We were down here on Liberation Day, and for the market to really top out in a big way, we need this S5TH to top out, and that stocks about their 200-day. That just sucks all the air out of the all the air out of the market. We've used all the energy we can going higher, and sets us up for a correction like we had back here. Now we can drift higher, but the energies come, this is basically an energy level of the market, if you will. This is interesting. We're just chopping around here. Haven't visited the bottom, haven't visited the top since back here in July. Probably due for a bottom hit, but that was pretty close. So NDFI stocks above their 50-day on the NASDAQ. Looks like we're gunning for the bottom. And then stocks above their 200-day on NASDAQ, probably still due for a top out. Russell, you can see it's been a lot more chaotic here. This may need a touch of the bottom so we can go shooting back to the top and get that 2600. Stocks with a 50-day on the Russell has been at the top back in June. Hasn't hit the bottom. Hadn't even gotten down in the 20s where I would expect a bottom. And then this one hasn't been up to the top for a while. Like 4 years. So we see that though. It has prolonged periods where it doesn't get up to the top. It just shows you that the small caps tend to be more weak. You'd be like, well, maybe 80 is not the place that that line should be. Maybe it should be down at 70 and indicate the top. And maybe. But I like to keep it the same across those. Then move. Not indicating any kind of, this is bond volatility by Bank of America, and not indicating any kind of volatility at all. So that's still crushing it down. Treasury rates all cruising lower, which is what the market wanted to see. So we can get more rate cuts, more cheap money. Federal Fund futures interest rate. Wow. Still expecting more cuts. Craziness. Crazy. Absolute craziness. All right, so jumping into some stuff like oil. We're just chopping in here. This is a lower high. I don't think that this can bottom out till we see the lower low. We got to go lower than what we had back here in May, April and May. Got to go lower than that to bottom this out somewhere down the low 50s, maybe even high 40s is what I expect. But time frame, we can keep grinding. We've been grinding this down for years now. We can keep grinding this down for a while. Now, if we get down in here and hold this 49.50, that can set us up for a new all-time high on oil, or at least a new local high. It may push up to an all-time high. GC, still chopping in here. Did not like that rate cut announcement yesterday. It was being soft on that, but now we're showing a little bit of bounce off that. So when Powell was talking, we were just getting pummeled here. Made that higher low. This may actually be sort of a bullish sign here, at least temporarily. See this do some sort of three-wave retrace. Get back up. Come up to a 618 of this big drop here. This being an A, a B, and then we get the vicious C. If you thought this drop was fast now, if this was actually an A wave and we do the B wave retrace back up in here. Now the thing I don't like though is that 618 sitting right there doesn't necessarily make sense to me. It would look better if it was right here. So this may push down just a little bit lower. And then we do a bigger retrace. And then we get the bigger drop. So gold's going to be a little tough for a couple months, I feel like. I was warning that this push out over here, we were 3 standard deviations away from the roadmap line, and we spent 7 days up there. 7 days. Back earlier this year, we spent 3 days out at the 3 standard deviation, and it took us 5 months to build back up the energy to go higher again. This 7-day push out right up here could take 6 to 9 months to recover. It may take a bigger trip down to the roadmap line to do that. So careful going after gold aggressively. This is really not good. No bueno, everybody. I just... Man, I don't want this to... If we get below this area, probably going below 100. 91, 92 is the target for supports. Draw this on here. I'm not sure. We may push as low as that. I want to see it hold this area right up in here. Put it on the long mode. Somewhere right in here is where I want to see it hold. Would be right here, ideal supports. Pull this on over a little bit. We're right at the limit here. Right at the limit. I'll zoom it back up and show you. I don't think we're doing this unless it just Hail Mary saves it. At this point, we've got the potential for a vicious downside correction. That was 3 waves up into this 618 right here, that high, that low. We stopped right there. Man, this is nasty. Poking below that 618 right there. If we get the close below it today, probably going below 100,000. This would be the ideal place to stop. But if we develop into something bigger, more vicious, this is going to be rough. This was 1, 2, 3, 4, 5 down. That was a 3-wave retrace. That's a potential 1, 2. It held very good proportions for this. Now it could be an A, B, and this could be the C, and we stop here. That's why this is the ideal support. But this is opening the door to go below 100,000. This right here, that's your warning. Getting below that low. Warning number 2, getting below that low. Warning number 3, this is where we're going. How do you know if that's the bottom? You need to see a reversal off of this level. You need to hold first, hold there. Reverse with a 5-wave up, 3-wave retrace, and then break back higher. This is what failed to develop here. This wasn't a 3-wave. This was a 5-wave down, 3-wave up, held the 618. So if you get a 5 up and hold a 618 here and then turn higher again, that's good for going on higher. But if this develops into a 5-wave down and we get a 3-wave retrace and we hold below this low, we're going on down. I'll keep you updated. Gotta hold the roadmap line. Gotta hold that. If we don't, this is going down to like 2,800 probably. NKD keeps cruising. Now, this is the weird thing in the market is we're seeing this global liquidity indicator shooting higher. Maybe all the money's sucking back into Japan in the short term, and then it's going to disperse back out. But yeah, right now, this is kind of crazy. I was expecting maybe we top at 49. We're going on up to 53. Party on. If we break above that, we could come up to 60. But we're not taking the other risk on assets with it right now. Just odd. The dollar showing strength. And I kind of speculated that maybe we see that pop back up into the higher move right there, 99.79. Now we're going to see what happens because that was a 3-wave. Lots of 3-wave moves here. Lots of 3-wave overlapping corrective type price action. That first move was 3 waves, then a retrace, then a single move, then a 3-wave retrace, and that's a 3-wave. This all looks corrective for one more flush down, potentially, on the dollar. If we get above 102, we're going to stop out a lot of aggressive longs. And that can propel this higher in a kind of a short squeeze situation. So we've already covered the Mag 7s, and then we've got Netflix kind of finding a bottom here a little bit. Maybe this is a pause. So this could be a 1, 2, 3. We get something like 2 to 4 times longer than that right there. Let's kind of measure this right there. That correction took 13 bars. So we can hang out here. Something like that. We mess around in here like this. and then get the final move down for Netflix. This is where I expect us to bottom. Could be bottomed out here. I just expect one more. Like this is potential an A. This is the B. That's a 1, 2, 3. This would be the 4, and that would be the 5. Could go a little deeper. You know, we could make the wave 5 the same size as the wave 1 to push this down a little deeper. All right, other stuff moving today. Now, still kind of working in this squeeze. Lily. I'm long Lily, looking for the pop. This is confirmation. That was confirmation we're going to pop up here. A 75% chance. Leaves 25% that we might go lower low. Google popping. INSM. Now, people ask me why. Why do I look at GOOGL instead of GOOG? These are the Class C shares, common shares, and they don't follow the patterns as well as the GOOGL, the Class A shares. So they have multiple classes. This is Class A, and they follow the patterns better. So that's why. CHRW, nice pop. May have a little more juice left in it for 175. TAI. Been looking for that to pop up in that target. Align. Still working toward finding a bottom here. We're under the roadmap line, gap down, giant resistance. Yeah, that, I don't know. Can't say for sure if that's the bottom or not. Tree. Oh. Potential for 81 right there. Trucking. And it's like ODFL. Trucking showing a rough time there. Estee Lauder was popping. Now we're dropping. Probably come back to the roadmap line again. Crux. I've been expecting another. That looks like an A, a B, nice clear 3-wave. And we need that dropout. So that's what I expect on Crux. Advanced Auto Ports is not like the other ones. You look at AutoZone and O'Reilly, and this one does not follow that same path. Builder's First Source looks like we're going lower on building materials. Nail. Looks like we're going lower. And not sure on that one. Building supplies looks rough. Shake Shack getting whacked. Could be an A, a B, and a C. We'll see what happens here. Might push it down below that low. KMB, Kimberly Clark. For consumer staple stuff, household personal care items, you know, this is stuff people just have to buy all the time. What a boring stock chart for that. Let's go look at some setups today. Wow, lots of stuff getting hit. Yelm Brands, taking a bath. PDD, still working on. Target up here at 180. BSTZ. Oh, didn't actually touch, but if it had, we'd be looking for, well, it's a 4-hour bounce. That's what it is. lower time frame. 23.45. Let's see, CNQ. CNQ, make sure it's the right one. Here's the high, here's the low. Turn on statistics. And looking for 33.78. DRV. That's in it from back here. Went lower, but it didn't stop it out. And we're looking for 21.17. JBL. Looks like it came up just shy of actually touching on this, but 243 on the upside there. NMM 50.64. NTB change over 47.83. And PFG firing off again. That one worked out last time. Here's the high, here's the low, and 86.08 right there. Yeah, that worked out. That worked out. Can we make it a three-peat? There you go. That's the one set up for today. Bias for today, I would be very cautious. This Trump G thing could turn into a bigger downside mess very quickly. Had it on the chart warning you for a while we could be complete here with that three-wave down. We just kind of potentially bottomed out. I'd be very careful if this has the potential to take a big down. Right there, similar to what we did right over here. Caution, everybody, caution. I'll be back, same bat time, same bat channel tomorrow morning, 9:15. We'll do it all over again. Hunt for opportunity, talk about chart patterns. Have a great day. I'll be on Market Masters at 11:30.